Hey everyone, welcome to Jiro's channel. If you're new here, make sure to hit the subscribe button and click the notification bell so you never miss out on our latest videos. Today, we're diving into the world of value investing, a strategy that has created a legend like Warren Buffett. If you're curious about how to build long-term wealth, you're in for a treat. So, what exactly is value investing? If you don't have that much knowledge about value investing, I've already made a video about it. You can check the value investing playlist here in the channel. At its core, value investing is about finding and buying stocks that are trading for less than their intrinsic value. Imagine you're at a market and you spot a valuable item being sold at a bargain price. That's what value investors do with stocks. Value investing was pioneered by Benjamin Graham and David Dodd in the 1920s and 1930s. Graham's most famous student, Warren Buffett, took these principles and refined them, focusing on buying outstanding companies at sensible prices. Looking in today's fast-paced, information-rich market, value investing remains crucial. It encourages a long-term approach, provides a margin of safety, focuses on fundamentals, and often involves going against the crowd. Plus, it has a proven track record of outperforming other strategies over long periods. Value investing also has some core principles. The first one is intrinsic value versus market price. The intrinsic value is a stock's true worth, independent of its current market price. Value investors buy stocks when their market price is significantly below their intrinsic value. Then we have the margin of safety. This concept, introduced by Graham, is about buying stocks with a significant discount to their intrinsic value, providing a buffer against errors in valuation. You've got to keep the long-term perspective because value investing requires patience. Stocks often take time to reach their true potential, and holding them long-term allows investors to benefit from compounding returns. Last but not least, we have the fundamental analysis. This involves analyzing financial statements, assessing a company's competitive position, and understanding its business model and growth prospects. When we talk about Warren Buffett's approach to value investing, he emphasizes buying high-quality businesses with strong competitive advantages at fair prices. Key elements of his philosophy include the circle of competence. You've got to invest in areas where you have a deep understanding. About the competitive advantage, remember to look for companies with sustainable competitive advantages. Focus is also essential and affects quality businesses. Prioritize companies with consistent earnings growth, high return on equity, and strong management. In today's dynamic, we can't forget about the Mr. Market analogy. Use market volatility to your advantage, buying quality companies at discounted prices. There's essentials key metrics for value investors. The first one is price to earnings ratio. If it's lower, the price to earnings ratio may indicate an undervalued stock. There's the price to book ratio. It compares a company's market value to its book value. It's important to measure a company's financial leverage through the debt to equity ratio. Make sure to have a free cash flow, indicating a company's ability to generate cash. The return on equity measures profitability relative to shareholders' equity. And the dividend yield, when has high yields, can indicate stable companies trading at discounts. Everyone has a start. When you're a beginner in value investing strategies, I highly recommend starting with limited capital. Use index funds or ETFs, focus on quality over quantity, and reinvest dividends. Make sure to build a value-oriented portfolio. Diversify across sectors, balance different types of value stocks, and regularly review and rebalance your portfolio. Also, avoid common pitfalls. Watch out for value traps, don't overlook qualitative factors, and avoid emotional decision-making. Now, when it comes to advanced value investing concepts, we start with discounted cash flow analysis. It estimates a company's value based on its projected future cash flows. The industry analysis and competitive positioning understands broader industry dynamics and a company's competitive position. You have to make sure to manage the quality assessment. It evaluates management's track record and alignment with shareholders. You must have behavioral finance. Recognizing and mitigating cognitive biases in investment decisions are essentials. Patience is crucial in value investing. It allows time for intrinsic value realization, benefits from compounding returns, and helps investors stay the course during market volatility. Cultivating patience involves setting realistic expectations, maintaining a long-term perspective, and managing emotional responses to market fluctuations. The key is to balance the concentration and diversification. Make sure to diversify across sectors, geographies, and company sizes while maintaining a core of high-conviction ideas. Use ETFs or mutual funds for broad exposure and regularly reassess your diversification strategy. You must adapt strategy to bull and bear markets, focus on relative value and quality in bull markets, and increase your margin of safety and balance sheet strength focus in bear markets. Explore international opportunities and be aware of economic cycles and technological disruptions. As markets evolve, the value investing adapts. Embrace technological tools. I would say to consider ESG factors and stay informed about market dynamics. Maintain flexibility while adhering to core value principles. To start your value investing journey, educate yourself, develop analytical skills, start with a paper portfolio, define your strategy, build your toolkit, and join a community. Embrace continuous learning and improvement, reflect on your decisions, and stay patient. Ready to start investing like Warren Buffett? Download our free Value Investors Handbook and join Jiro's newsletter for more insights. If you found this video helpful, don't forget to like, share, and subscribe. Thanks for watching, and see you next time.